All right, so we just at 146.50. We have finished the shoulder level. Remember the central bank cap. We're actually expecting a cap to come in at 145, 145.70. Over here showing 144.50, but the cap is really at 145.70. So the market moved above the cap. We should have observed the cap itself. Now we're taking one of these red moves to the downside. We talked about this several times. There's going to be a very complicated shoulder level above this neckline, ups and downs in shoulders. We did the up leg. We're going to be doing this down leg. Possibility to see 140, possibility to see 138, possibility to see 137.50. You just want to drag this red arrow here. We're now doing a move to the downside. That's all. All right, so the market did 146.50. This is leg B. We're going again to 139. We're going to the neckline. We're expecting a shorter head. We talked about this, that the market was doing descending heads. And the rejection comes in at the 200-point moving average on the 4 hours, which is, of course, very logic. Let's take it to yesterday's 45 minutes and then to trade management on the 15. So now we have double shoulders. Rejection actually came in slightly above level 1. We probably, this is level 1 now, where we're holding the white arrow, because this is 147. Rejection comes in at 146.40. Right? There was a flasher to take a trigger there. We will now consider that this is a cycle central line. So you're seeing a cycle, this cycle top, this is cycle bottom. We have topped the cycle at 146.14 or 146.80. It's a shoulder level. At least we go to the cycle central line. We are already below this because we're at 142.70. The cycle central line is 143.40. 142.70 is right there at the moving average. With continuation, if you see negative momentum, should take you to the cycle bottom, or should take you to leg 1. This is level 1, 141, where you have the red arrow. And this is the most probable target. Likely also to break to 140 and 138 if you're doing an equal measure of the cycle itself, from the shoulder level to the cycle bottom. Take it to trade management. That's what we're seeing right now when we go live. We are seeing, of course, failure at this neckline. This red neckline. It used to be green yesterday and the market is moving higher. But there's failure now. Get shoulders, get the head. The market is already at the shoulder level. Everyone would expect a bounce to shoulders and show the shoulders. But there's even a higher, bigger shoulder here, and therefore the market continues all the way to 140, 140.20, 139.70 before it does the bounce into shoulders. Before you get this bounce. Because the momentum is showing this. So with respect direction momentum and take the trade accordingly. Take it now to, I believe we get the same technical picture throughout, so we'll just check if we're seeing negativity on the hourlies. We don't. On the 1 hour, we don't. On the 4 hours, we are beginning to become negative. And on the day, very negative as a matter of fact. So to short sterling, dollar yen is actually better than to short sterling yen, looks like it, because of the negative plot. Remember, on the dollar yen, we don't, on the sterling yen, we don't have negative momentum. So we want to compare. We do have negative momentum, but not as severe as what we're seeing on the dollar yen. Not trending, that is. We just got rejection, and that's all. All right, so we have severe momentum. Let's take this to trade management, 15 and 5. Same structure, identical, exactly. We had a more complicated structure. Bear with us a few moments. We only focus on the local structure out of which the breakout is occurring. Local structure shows the leg 2 at this point, so we had a 1 and a 2, we had a 3 and a 4 and a 5. We short market, stop is above this point. It can't be simpler. Let's take some of these labels. Alright, I believe this is clear now, so let's enlarge it. We're seeing an A and a B. B is at that point, and then we've had a 1 and a 2, 3, 4, and a 5. We just short market because there could be central bank intervention, there could be, of course, slippage continuation, and we have a hedge above 144 or at 144. Market is at 142.56, so we're looking at something like 150 points of risk or above this point. Target is towards the end of the day 140, we believe. Maybe like we were seeing, we'll still look at the projections, support projections on the hourlies, but it's possible, of course, to go as low as 138. Let's take this to the hourly now to project target. All right, so we're seeing support one at 140.80. We are also seeing support two at 137.74. Let's indent these. Let's take this 2 minutes. You're looking at support one here, 140. 80, and we are also looking at midway between support 1 and support 2. So this is 140.80 or 141. Support 2 is right there. Shows now more clearly. This is 138 or 137.88, and in between is 139.32. I believe we go for 139, we go for 139.30. I believe we will be able to get it. Possibly today, actually. We're seeing, of course, someone may consider these our shoulders, and this is correct. But usually, the market would move immediately to the neckline before bouncing and doing the shoulders. So it's not like we get to move in a step-like formation, doing shoulders, and continue to the downside. It's possible, but we perceive we have an leg 3 because of the break to the downside is very strong. So this continuation to one of these support levels before you get a bounce on the first shoulder, then continuation, then get another bounce to do other shoulders before you get to see multiple shoulders. You have seen lower lows. All right, so the market is a sell for United States dollar against the yen. We are going to have a hedge at 143. I believe we can take it a bit low to 143.50 below this junction here at that hedge. And the market is in at 142.50, so it's 143.50, 143.70 at the most. The hedge is 143.70. Entry is market 142.50. We are going to target end of the day or target 141, 140.80, possibly 50% between support 1 and support 2 is more likely, 139.50 or 139.30.